Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are a plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Amol Joshi, founder, Plan Rupee Investment Services. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Amol, good evening and welcome to the show. We have our first viewer online, Santosh from Bangalore. Hi Santosh, good evening. How are you doing today?
Thank you. I'm doing good.
So you want to know about government-backed bonds such as UPPCL and APSPL, and you want to know if they are a better investment instruments than mutual funds, that too for a longer period time frame. Is that right?
Yes, right.
So far, have you invested anywhere?
Yeah, I've invested in UPCL and APS.
You have already?
I just wanted to know, is it good to further invest over there itself because it's a 10-year bonds which has been issued?
Sure. Any specific reason why you are looking for fixed income instrument and you don't want to go to something which is equity related, like equity mutual fund? Or you do have a portfolio, is it?
I do have a small portfolio.
You do have a small portfolio?
But this is both. Yeah, but I felt it's always a risk-free investment over here, and a guaranteed income for the next 10, 12 years.
Okay. All right. So we will explore this investment option and also if there's something better in fixed income that you can opt for. So Amol, could you please explain us the kind of investment he's talking about, UPPCL and APSPL, for all those investors who do not know about these government-backed bonds? How would you like to explain?
Sure, Kavita, glad to be here. And good evening, Santosh. Santosh has actually explained his thesis in one simple word or one simple line. He said that it is very safe. So obviously, all the government-backed, be it state government or central government, all the government-backed, government-promoted institutions are generally considered to be very, very safe compared to their private sector counterparts. So that decision or that thought process, Santosh, it's bang on. However, to answer your question whether I can continue investing in these, and you have mentioned two names, safety aspect is we have already discussed and it is out of the way. But let's come to another aspect of any sound financial plan, and that is diversification. Now, most of the times we think that diversification is only across asset classes like debt, equity, gold, international equities, etc. But within the given asset class, that is debt, I would really not advise to put all your eggs into one or two companies or all your eggs into one basket. There is a simple solution. You mentioned there is a 10-year kind of bond residual maturities there, the bonds that you have purchased. You can get mutual funds in fixed income segment or in debt segment from 1 week maturity all the way to 25, 30 years maturity. The only advantage that I think, or maybe 2-3 advantages that I can list over here, one is professional management of mutual funds instead of one individual, a layperson picking bonds. Number two is the daily NAV and daily liquidity that is available in a mutual fund format. And the third one, which I already mentioned, is the diversification. A typical mutual fund portfolio can have anywhere between 30 to 50, 50 to 70 bond issuers. Similar thing is about equity, but let's keep that for another day. So because of these three reasons, I would suggest, since you have already made some investments into these bonds, probably you would like to diversify into fixed income mutual funds for the advantages that we spoke of just now.
Santosh, is there anything else you want to ask Amol?
Amol, which is probably the closest, would you recommend actually the closest, which is the safest, probably the risk-free mutual fund, if you can also suggest?
Sure. Santosh, so I mentioned we have
state government bonds. And one more question, sorry, Amol.
Yes.
Is it 100% safe? Because nowhere I see any kind of a thing where it says it is 100% safe. State government bonds also. Is there a possibility that even a state government can go bankrupt?
Amol, we also have other caller on the line. Yeah. What will be the answer for Santosh? Amol?
Yes, my answer is so far, none of the government-backed institutions have defaulted. So it is considered very, very safe, Santosh.
Move on, and we have Sunita Balwada from Gurgaon. Good evening, Sunita. How are you doing? Sunita, hi. Can you hear me? Sunita? All right, we will try to get her back on the call. Are you there, Sunita? Can you hear me? All right, I think the call got disconnected, but then we'll try to get her back. Amol, Parag Parikh Flexi Cap, 10,000 SIP and Kotak debt hybrid. She's investing through SIP and she wants you to suggest a good mid cap and small cap fund and she wants to invest 10 lakh. Do we have Sunita on the line? Okay. All right, so let's move on. I am not sure about the third fund that's written over here. It is an index fund, but then I don't have the AMC's name. Amol.
I think Kavita, I think it is a Kotak fund. But anyway, do you want, for us to attempt this question?
Yeah, let's go on.
It's a Kotak hybrid fund, 5,000 rupees SIP, the third fund that is mentioned by
And
Sunita.
the second index fund?
It is Nifty 50, so it's nothing but a simple Nifty index fund.
All right, let's go on.
All right. So, Sunita, if you are listening to this...
I'm so sorry, Amol. I think we got Sunita online. Sunita, hi, good evening. Sunita?
Anji?
Hi,
Hello?
Good evening.
Hi, good evening.
Thank you so much. You've sent us your question on the Money Show on ET Now. We are taking you live and you have sent us 3 mutual fund information, which is Parag Parikh Flexi Cap. You have a Nifty 50 index fund and you have Kotak debt hybrid. Is that right?
Right.
And since when are you investing in this, Sunita?
Actually, I just started investing just 2-3 months back.
Okay. And you got this recommendation from a financial planner?
No, actually, I just watched videos
Okay.
on YouTube only.
Okay. Okay. So you have 10 lakhs to invest and
Yes.
so right now the SIP that you're doing of 25,000, is this a part of your 10 lakh amount or is that separate?
Right. No.
It is a part.
This 10 lakh only. Yes.
Okay. Okay. And you want to invest this for how long? For how many years?
For at least 10 years.
10 years? Okay.
7 to 10 years.
7 to 10 years. And
Yes.
is it just the 10 lakh amount that you want to invest or you are also willing to do an SIP once you invest all your 10 lakhs?
Actually, I've already started SIP in these 3 funds. And after 3-4 years, I'm planning to again add money in this only. So, and I just want to increase my funds also because this is not all the funds I've included. These are just 3. And I don't want to invest more in Kotak, I think. Or what you suggest?
Okay. Any specific corpus you want to accumulate with this investment?
No, actually, my husband is a retired army officer. So we have our pension. I just want to just give some money to my children. Not specific, any specific goal. We have a house, we have everything. Just for investment purposes and just to give some money to my children.
Sure. Would you be knowing the name of other funds in the portfolio? Because right now we just have 3 funds information. Or you just want us to review these 3 funds, that's it?
To review these 3 funds and what all more funds can I add. And I just want to know one more thing. Is this right time to invest in mutual funds since markets are a little high?
Sure. I think that's a valid question and Amol will come to it. But then, okay, Amol, first the choice of the funds. What do you have to say?
Right. So I would believe that these funds, Sunita has mentioned that she has not consulted any professional and via listening to videos she has chosen. But from these funds, Sunita, these are equity-oriented funds. Even the third fund that you have is also in debt hybrid category. So that also has some kind of equity element in it. My first suggestion would be to remain invested for 7 to 10 years, as you have rightly mentioned. Your risk appetite comes out to be as a moderate to aggressive kind of an investor. Your initial question also, you asked us which of the mid-cap and small-cap schemes can you add? Let me answer that question as well. Within mid-cap category, you can look at Motilal Oswal Mid-Cap Fund. Within small cap category, you can look at Nippon India Small Cap Fund. One of the last questions that you asked was whether this is a good time to invest or not, especially since you are going to invest in a SIP or systematic manner. I would say that any time is a good time or any time is a right time. It simply goes on to say that we do not know what market level will be 1 month from now, 3 months from now, or 1 year from now. SIP invariably will get you average of all the entire length of duration that you are planning to stay invested, or rather planning to invest via SIP mode. Little bit about, let's talk about valuations also. You would recall that October 2021, we saw Nifty at around 18,800 levels. And today, 1.5 to 2 years later, we are at similar levels only. Within this time, while the market has remained at 18,000 or so, some dips and some rallies, but EPS, or the earning per share of Nifty as a whole and all the Nifty components, has gone up. That makes overall valuation cheaper. So in short, I would like to say that since you are looking at SIPs, you can continue with your SIP for as long as possible and remain invested for 7 to 10 years for within equity asset class to get the best results.
All right. Thank you so much, Sunita. I hope Amol has answered all of your questions. Is there anything else you want to ask him?
Thank you very much. I just want to know one more thing. This 10 lakhs, should I be investing in lump sum later on, or SIP is good for me?
SIP is good, but then Amol, what's your take?
Right. So if looking at your current breakup, you have 25,000 rupees of SIP. So you will take about 40 months to exhaust this 10 lakh rupees amount. So I would say this is slightly elongated duration. My advice would be getting over with your SIPs, or rather typically we call it, if the money is going from bank, it is SIP. You can probably put your money to good use. You can invest the entire lump sum into liquid funds. Liquid funds are non-equity funds. They do not possess any equity characteristics. They are not volatile like equity. Do the transfer from liquid fund to the intended equity scheme. That is called as an STP, or systematic transfer plan. I would suggest a maximum 6 to 9 months kind of STP. 40 months or close to 3.5 years is too long a time horizon to spread your to enter the markets, because see, your horizon is 7 to 10 years. If I take lower bound of 7 years, 3.5 years of SIP would mean that 50% of your intended horizon, your amount is not even fully invested. Because of that reason, I believe 6 to 9 months kind of a STP or even SIP would be a good choice.
Best, Sunita. We move on and we have Sushil Kumar online. Sushil Kumar, hi, good evening.
Hi, ma'am. It's Sushil Kumar speaking.
How are you doing, Sushil? Thank you so much for sending us your question. You want to know more about ETF funds?
Yeah, ma'am, ETF funds. I want to know about how can I do ETF SIP in ETF funds.
Okay, you want to know the expense ratio and from which platform you can buy an ETF fund, right?
Yeah, ma'am.
Any specific reason, Sushil, why you are looking at an ETF?
Actually, I am having my funds in SIP in mutual fund also, but I want to explore in ETF also.
Okay.
That's why I'm trying to invest in ETF.
All right. We'll get your question answered. So, Amol, that's the beauty of something like a mutual fund where you have all kind of investments, depending on your time frame, your risk profile, the kind of goal you want an investment instrument for. And here, when we talk about debt, or we talk about fixed income, or if we talk about even a passive strategy, in fact, index funds and ETFs are actually catching up, and investors are looking out for it. A lot of trend, or a bigger trend we saw in the large cap category, but lately a lot of interest in ETFs have come up. Are they really cost effective when we compare it with other categories of mutual funds in the passive category?
Right. Kavita, so let's answer your question first. Are they cost effective? So let me tell you that one of the most popular ETF, Nifty based ETF, has expense ratio of 6 basis points only. So I would say that this is as cost effective as it can get. And this is probably also the reason why somebody like Sushil Kumar, who already has investments in mutual funds, is planning to invest into ETF. So having answered your question, now let's go to Sushil Kumar. Sushil has started by asking, I want to know more about ETFs. So ETFs are exchange traded funds. These are types of mutual funds only. These are passively managed, as Kavita, you rightly said. These are typically benchmarked, or these ETFs mimic a particular index that you want to invest in, or the product that is available. Since these are exchange traded funds, you cannot buy them via a platform or via an application form like you buy mutual funds. But since these are exchange traded funds, you will have to essentially buy and sell them on an exchange platform. And what do you need to transact on an exchange? You need a demat and trading account. Sushil, another reason, your next question was how to set up an SIP. Traditional SIP that you are used to, since you are an existing mutual fund investor, that kind of SIP does not exist in an ETF. The simple reason is in mutual funds, you can buy partial units also. By partial units, I mean, if your SIP is 10,000 rupees and NAV is 41 point something, then you will not get exact number of units. You will get the partial number of units as well for the additional amount. In ETF or in any of the stock, in India, you do not have partial stock ownership. So instead of buying a set number of rupees, you can buy a probably amount that is somewhere closer to that. Most of the demat and trading platforms do not offer SIP kind of facility, but since you have asked, a market leader, somebody like Zerodha, they do have a manual SIP where you have to enter the amount. And within that amount, whatever the exact number of units that you will get, not partial units, obviously, I have explained that, that is the kind of purchase that you can make on a desired date, let's say 5th of the month or 10th of the month. So you can explore on these lines.
All right, Sushil, hope that your question is answered and all the best for your investment going ahead. And on that note, Amol, thank you so much for being on the show and helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave you with our WhatsApp number and email ID where you need to send us your mutual fund related queries. 8657974571, WhatsApp number, themoneyshow@etnow.tv. That's the email ID where you can send us your queries. Thank you so much for watching. Goodbye.